Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Every day on this podcast, we talk about the Aussie dollar. In the last 12 months, well, there hasn't been a great deal of movement. In fact, it finished last fiscal year pretty much where it started last fiscal year, but it's now sitting above 67 US cents, with some tipping the rally may continue, might even hit 70 cents in coming months. At the same time, the Aussie dollar is around a 30-year high against the Japanese yen, so it's no surprise tourists are heading there in droves. Ray Attrill is head of FX strategy at National Australia Bank. Ray, welcome to Fear and Greed.
Nice to be here. Thanks for having me.
What's happening with the Aussie dollar? Why are we seeing it appreciate against the greenback, and how high will it go?
Well, I think two things really to sort of stand out for me, at least anyway, in terms of what's caused this breakout from, as you rightly described, has been an excruciatingly narrow range for the Aussie. And, certainly since the start of the year, we've been trapped sort of between, roughly sort of 64 and 67 cents for most of it. So, we have poked out above 67. I'd say two things. One is that ever since the middle of June, when we had those monthly Australian CPI numbers printed for the May number we got in June, which was a little bit of an upside surprise, as a result of which we've seen Australian money markets moving to price in the risk that the RBA might not be done tightening after all, and that there's a serious risk that we could see another one or even two rate rises between now and the end of the year. So that sort of repricing, if you like, of RBA risks has had a direct beneficial effect on the Aussie. So I think that's sort of exhibit A. And then exhibit B is really that we've started to see the US dollar losing a bit of altitude generally, not just against the Aussie dollar. And I think that, that links directly into some of the incoming economic and inflation numbers that we've had out of the US just in the last couple of months that show some pretty clear signs that the US economy is losing a bit of its, what I would call, economic exceptionalism, which I think was very much the hallmark of 2023. It looks like the high inflation numbers that we had in the first quarter of this year, are giving way. Were more noise than signal, I think, and they have given way to evidence of inflation coming down. So I think you've had that bit of a pincer movement upwards for the Aussie, a repricing of RBA risks alongside more confidence that the Fed is going to be embarking on some kind of an easing cycle, probably starting before the US elections. And that's why we're sitting here closer to 67.5 than sub 67.
So how high do you think it'll go? Will it keep going? Is this trend something that'll last for a couple of months?
Well, a lot will depend on whether or not the RBA does actually deliver on the market's fear that there could be another rate rise. And to be honest, we can't make that determination until we get the second quarter, the full quarter inflation numbers, the Q2 CPI numbers, which aren't out until the 31st of July. That's just ahead of the RBA's August meeting. So depending on sort of which side of the line relative to the RBA's own sort of internal forecast those numbers fall, that will determine whether it's sort of game on for a potential rate rise in August, in which case I would say, there's a fair bit more upside for the Aussie in the short term. And obviously on the other side, it does depend whether this building optimism for US rate cuts, does prove to be justified. There's a lot of economic news to flow under the bridge between now and the Fed September meeting. Certainly, we're not expecting anything out of the meeting that we'll get later this month. So, and NAB's view is that the RBA, unless those numbers are really a horror story at the end of the month, the RBA may well decide to sort of tough it out and stand pat. But, which if that's the case, it would take a little bit of the heat out of the Aussie. But on the basis that, we do think that US dollar weakness, has got a way to travel, assuming that the Fed is going to deliver, in our view, at least a couple of rate cuts between now and the end of the year. That alone may be enough to see Aussie, improving on current levels. So we've got a forecast for, I think it's 69 cents, it's a kind of point forecast for the end of the year. So for choice, we do think that we can go higher from here, but I think it's more dependent on that US dollar continuing to roll over than the RBA necessarily, following through with the sort of market threats, if you like, or the market fear of higher interest rates here.
Stay with me, Ray. We'll be back in a minute. I'm speaking to Ray Attrill, Head of FX Strategy at National Australia Bank. Okay, so the dollar itself is just a price. It's not, up or down. It's neither good nor bad. It's just a price relative to other currencies. When we talk about it, we always talk about short-term moves, and that's mostly about interest rates because, changing views on inflation and rates and stuff like that shifts currencies. What about if we step back from that? When you're a big exporting country like Australia, so you're selling iron ore and you'd imagine people will want to buy that iron ore. Now, I know it's priced in US dollars, but it may mean that they need Aussie dollars. You also have government debt. All that. What are those sort of bigger picture things that shift currencies outside the more short-term interest rate factors?
Yeah, well, certainly as far as Australia is concerned, if you go back, go back to the 1983 where the Aussie dollar was floated. And I would say, when talking to clients, if I'm only allowed, one club to get around the golf course, and the golf course is the Aussie dollar, give me commodity prices because, swings in commodity prices, particularly the prices of the commodities that Australia is richly endowed with, and exports, and obviously iron ore and LNG are number one and number two there on the list. The volatility in those prices has really explained most of the kind of medium-term or bigger picture swings in the Australian dollar. The problem with that is that really since sort of 2022, or really going back since COVID, there's been a clear break in the relationship between commodity prices and the Australian dollar. Effectively, commodity prices have been relatively elevated, and yet Aussie has spent, most of the last 3 or 4 years languishing sort of well below its long-term average. So there's something going on there that, we've been struggling as currency analysts to get a head around. And, the way I think we resolve that is to sort of say that a lot of the strength that we've seen in commodity prices doesn't necessarily reflect a strong global economy. In fact, the global economy has actually been performing below par or below trend, for the last 3 years. So really a lot of this commodity price strength a lot of it is supply shock driven because of all the various disruptions that have occurred, through COVID, with Russia's invasion of Ukraine, Middle East, etc. So all of these things have led to sort of elevated commodity prices that are not symptomatic of a strong global economy. And so the conclusion that we draw is that when the global economy is doing well, Australia does well and the Australian dollar does well, and vice versa. And at the moment, so we're in that period where it looks, there's some tentative signs that maybe global growth prospects are picking up, not so much in the US, but in other parts of the world. And if that really, follows through, that would give us reason to think that maybe Aussie can trend up closer to its sort of long-term average, which is nearer 75 cents. But there are lots of ifs and buts to that story, not least of which is sort of the geopolitical and political landscape. And, dare I say, what it might mean if President Trump returns to the White House at the end of the year.
So just bringing that in to perspective here, the US dollar has been very strong. You mentioned that it's come off a little bit. Other currencies against the USD, yen being the standout, but the euro and the Chinese yuan and I think the Canadian dollar, I might be wrong on that one. They're basically, the US dollar has been very strong against those currencies. And when you read stuff, they're always talking about the risk-free currency is the US, relatively risk-free currency is the US. How does that also play into this kind of picture when you have so much geopolitical uncertainty, when you have the potential of Donald Trump coming in? Does that actually support the US dollar sort of in a funny sort of way? Like it kind of goes against your natural view on that, but it seems to be the way.
No, certainly. I mean, when the US is the epicenter of sort of geopolitical stress or whatever, you would think that its currency would suffer. But let's not lose sight of the fact that the US dollar is the preeminent global reserve currency. The US enjoys what's referred to as exorbitant privilege, where it gets to issue government debt, if you like, that is denominated in the world's favoured reserve currency. So the US gets away with stuff that the rest of the world frankly doesn't, in terms of, being able to run big trade deficits and then budget deficits and having no problem at attracting capital from the rest of the world in order to fund those deficits. But, because of the US dollar's reserve currency status, it does mean when bad things happen in the world, global investors sort of flock to the safe haven, if you like, that is the US dollar. Now, whether that situation, will persist indefinitely is a great talking point and discussion point in global markets. But the fact is that it's there and it's probably there to stay for some time to come. So, anything that causes stress in financial markets, is prone to see the US dollar appreciate, and the Aussie dollar. At the end of the day, we are a very small, open economy, away from, in a dark, deep corner of the globe, basically. Yeah. So if global investors all want to take their money home and stick it under the proverbial mattress for safety, then the Australian dollar tends to be a currency that suffers in that sort of environment.
Ray, one final thing. Sorry, just to reiterate, so your view on the Aussie dollar over the next sort of 6-12 months, you think your central case at least, lots of ifs and buts, is that it will appreciate?
Yes, it is. And I say that probably the single biggest caveat, and that the real underlying rationale for that is that the US economy is slowing, inflation's coming down. As and when the Fed sees fit to start cutting interest rates, that will be a process that will probably continue for another couple of years. And since most of the dollar strength that we've had in recent years really stems directly to the tightening of Fed monetary policy and higher interest rates since mid-2022, if that process goes into reverse, then history would have you believe that the US dollar will fall. What I would say is that probably the single biggest caveat to that view, and directly to the Australian dollar, is if we are faced with a Trump 2.0 presidency next year, and if President Trump were to go ahead with his threats to impose large-scale tariffs, not just on China, but the rest of the world. Not that I think, the cool light of day, he may go ahead with that. But were he to do that, the consequences for global economic growth, I think, are pretty negative. And in that environment, the dollar will probably do well because it will be a risk-off environment. But the Aussie dollar would be a currency that would probably suffer as much as any in that environment. So if I tell you that I think Aussie dollar will be somewhere between 70 and 75 for a good part of next year, and then Trump comes along and imposes swinging tariffs on the rest of the world, to which they will retaliate, then all bets would be off as far as a stronger Aussie dollar is concerned.
Ray, thank you for talking to Fear and Greed.
My pleasure. Thanks, guys.
That was Ray Attrill, Head of FX Strategy at National Australia Bank. This is the Fear and Greed Business Interview. Join us every morning for the full episode of Fear and Greed, Australia's best business podcast. I'm Sean Aylmer. Enjoy your day.